elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, guys? Welcome back to my YouTube channel, Goofy Investing, where we talk about investing in the stock market. This is the underground. It's a small channel, but small channel that provides big value, okay? We're not like the other YouTubers here. We're not here for just clicks and stuff, all right? There's some developmental and entertainment stuff happening on this channel. I'll admit, more tailored towards your small and mid-cap high-growth companies. I am an aggressive growth investor, so I mean, there that is. But I got this ticker request on this company called Rbrk, all right? And from what I understand, this is a popular stock on YouTube where, there's a lot of pumping and a lot of people saying this is it, this is it. We're going to go over it. I'm going to give you my take on it. We'll dissect some of the analysis on their financials, business model, format, and stuff I've noticed on their 10K, how they've structured everything, and so forth. All right, so let's get into it. Ticker RBRK, trades on the New York Stock Exchange, $69.32 a share. I'm tracking that these are Class A shares, and there are Class B shares out there. We'll get to that in a bit. Market cap is $13.46 billion. Looking at the actual chart, looks like they IPO'd here April of last year for $38, and then had a little dip on the bottom here around $28. And then on the actual 1 year, it's looking like 36.40% and 6% year to date. All right. Quick disclosure before we go any further. I do not hold a position in Rbrk. I assure you this blank out is not Rbrk. As you can see, the cost basis on those shares on this blacked out play is $7.81. So you automatically know it's not Rbrk. If you want to know what this next play is, you could check out the Patreon and get the heads up before it shows up on YouTube. All right. So let's go down here. All right. So bullish around all quadrants. Okay. Seeking Alpha analysts got this as buy. The street's got this as a strong buy, and the quant has it as a buy. All right. We're going to see if Goofy has this at a buy later on in the video. All right. So where are they headquartered? What do they do? Okay. So they're headquartered in Palo Alto, California. All right. I'm getting these Silicon Valley vibes happening. All right. But on a serious note, Rbrk is a cloud vault. They provide a cloud vault business model, which serves as a cybersecurity resilience product offering to their customers in the form of a tech SaaS business model, a subscription, if you will. So the idea is, let's say I own a company and I want to back up all my stuff on a cloud that's protected from cyber threats. So if I get hacked, the idea is I can go to this cloud vault and then I will get all my systems back up and running within a day. And I can rebound from the cyber attack real fast. They call this cyber resilience. All right. So, and let me pull it up here. There it is. So cyber resilience is the future of cybersecurity. The idea is not to prevent the actual attack. The idea is to come back quick after the attack. All right. So that's the main business model. So there that is. Let's take a little sniff check on some of the financials. Valuation. All right. 1.52 billion in cash, 1.17 billion in debt, 13.46 billion market cap, and a 13.11 billion enterprise value. All right. I've dissected their 10K. I've dissected their earnings transcripts and all of that. I'm tracking 1.1 billion of this is convertible notes. All right. So we'll go right into it on their 10K analysis. PCOB auditing checks out as far as that's concerned. Um, so there are convertible preferred stock shares out there that are redeemable through these different series. As you can see, here's the charts on what's outstanding, series A through E in different tranches. And then they actually should have, bear with me, here's exercise conversion prices applicable right here in conversion. You see tranche at 67 cents, $2.44, $6.85, $11.85, and $23.55 respectively. All right. So let's talk about some of the format. This is a co-founder led company. So that's something that I'd like to see. We'll look at their leadership. So I'm under the impression that they're the founders. There's four of them. Okay. And I think there's merit in this. Looking at their management team and the take that I get is a lot of them are young, hungry for growth, so it checks that block. Some of them got some grays going on, and some of them are a little older, but for the most part, I assess this as more mid-aged, executive management. Good enough. All right. So there that is. Ownership, it looks like 18.9% or 18.98% of the company has insider ownership presence. So I like that. I think that's a good median. All right. I do see that there is a lot of institutional ownership in this actual equity. If we go back to the 10K on all these series notes that I outlined right here, guess who you guess who you think owns these series? All right, they may not, uh, they might not automatically declare who owns it or what have you, but um, you can take a wild guess. Yeah, the street. All right, I bet the street owns a bunch of these series preferred shares. Here's their actual investor analysis or investor analyst coverage for the stock. So you got a whole list from all these banks. All right, going all the way down here. All right, it's too many to count, too many to memorize, whatever. All right, so that explains a lot. I assess that this company is in bed with the Wall Street or in bed with the street, and there's a lot of street presence in the actual equity, and they own a lot of the equity. All right, which will go to our ratings. We'll go to Wall Street ratings. Of course, Wall Street has this as super strong buy. We'll look at the actual price target versus the actual equity of what it's trading at. And it looks like $115 price target here. All right. I'll give you some indicators on price action and I'll give you some predictions here in a bit. But be patient with me. All right. So these convertibles, all right, I'm tracking. There's 1.1 billion out of this debt of convertibles that I take from recent earnings call. And that's it is what it is. I'm tracking their tranches of those series. Let's talk about the format of their shares. So I'm tracking that upon the IPO, the founders had F shares. Now pay attention, all right? The founders had F shares. When they IPO'd, those F shares converted to B shares. These B shares participate just like your common Class A shares, which trade on the market, as far as they trade identical from a monetary basis as far as participation in EPS, profits, and so forth. So it's equal across the board as far as that's concerned. The only difference between the Class B and Class A shares is the Class B shares got a 20-1 voting power against the Class A shares. So this is how the founders are able to get into the public market, protect their power in the company, which is understandable. Those F shares, a lot of investors of my cohort, we nickname that FU shares. All right. But for all intents and purposes, they're the same thing, except they're looked at differently, okay? But they're Class B shares. Typically, Class B shares attrition out, and they convert to Class A shares. I am seeing a little bit of clauses in here on the 10K that outline that. The rate at which they attrition out will depend on a lot of things, all right? Indice upgrades into the S&P, etc. And that's something that I see too. So they structured this pretty clever to where they would probably in the future they would be able to have an easier time upgrading into an indice and receiving indice upgrade prestige, going into the S&P 400, going into the S&P 500 large cap, etc. Okay, so I like that. The possibility is still there. All right. So hopes and dreams are alive. All right. You can't say that for every stock. All right. I look at a lot of these other stocks, and the format of their structure disqualifies them from ownership prestige into indices. All right. Such as the S&P. And to me, a lot of the time, that's a deal breaker. And a lot of the time, I'll look at these other companies and the different classes of shares, they don't participate properly and equally across the board in terms of profit and EPS, etc. All right. Not like that with this company. I'm seeing, this is pretty much, I think they did it the right way, going on to the structure with the IPO. Okay. Now that we got that out of the way. All right. Let's talk a little bit about their business model, um, and what they're doing about on sales and margins and so forth. All right. Well, look at gross profit margin first. All right. 77.96%. Real good gross profit margin. I'd expect nothing less from a tech SaaS company to be up here in the 70 plus arena on their gross profit. A little bit further away from GAAP profitability. High free cash flow margin here. All right. That's pretty high for a tech SaaS company. So I hand it off to them. They got strong free cash flow. We'll go to their cash flow statement and look at the historicals of the cash flow. That's a quarterly basis. So right off the get-go, they were a free cash flowing positive company. We'll go to an annualized basis on a little sniff check. Cash flows are growing. All right. This is the trailing. They still have 1 quarter to go. So probably looking at exceeding growth on the year over year comp to free cash flow. The levered and unlevered free cash flow, little gap, but nothing serious. All right. A bunch of that 1.1 billion in debt is in the form of convertibles that are not yielding coupons, preferred share dividends, if you will. We'll go to their actual income statement and verify that. And it's something I've also read on the 10K. We see no preferred share dividends right here. Typically, they're right under the net income statement, and then the net income to the common shareholder is the same as the net income. If you see preferred share dividends happening, it'll eat right off the net income, regardless of if the net income was positive or negative. If it's negative net income, the preferred share dividend just exacerbates that negativity, if you will. Shares outstanding and dilution. All right. Good chunk of dilution here, but probably justified with the growth rate on the actual financial income statement. Top line revenues growing real strong. Right off the top of my mind and top of my head, looks like 30% ish plus. We'll go to the earnings. Oh, yeah. 48, 51%. Massive beats across the board. EPS is going in the even non-GAAP EPS is going in the right direction as far as how do you say it's becoming a more profitable company, even though it's not a profitable company, right? So there's something to be said there. They got a good track record. They're in the right direction as far as that's concerned. All right. Their next upcoming earnings. Actually right around the corner, the 4th of December post-market. All right. This is not a pre-market. This is not a pre-earnings video. Okay. So keep that in mind. This is just a stock analysis on a general basis. All right. So one thing that caught my eye, all right, and some of what's happening. All right, they have a strong ARR rate. All right, so their annual recurring revenue, or NRR, I'm sorry, is 120%. Net revenue retention, great metrics. This company would fall along the lines of having to meet specific tech SaaS metrics to financial institutions, being the tech SaaS triangle metrics requirements for applicability to price forward sales on a dramatic basis. So this company has the potential, and they will be judged based on that. So your NRR rate, your rule of 40, all of that good stuff is going to be judged by the street. And the street is heavily going to be monitoring these metrics as the company goes along. All right. I think their SG&A and R&D is too high. I don't like the delta between their sales and their OpEx. I think that they need to start building some synergy there. Um, at least get it in the more proper direction. So there's that to consider. It's kind of up and down here. There's a little less consistency. Last year, the SG&A was more than the sales. This year, the SG&A is a little less than the sales. So, I mean, we'll see how the year plays out here on 4th of December, which I'm probably not even going to follow up with this stock, to tell you the truth. All right. Depending on, and I might, if if there's enough interest and, maybe my Patreon bugs me enough on it, I will. But other than that, I wouldn't. All right. What's my interpretation of the earnings call? How is the management doing this, and so forth? How am I seeing this all? I think the earnings call was a little rough. It was a little hard to understand. I think they could have, you know, I think there's portions of the earnings call where they were trying to rush it and cram all the info as fast as they can. Um, sometimes keeping things a little more simple is okay. All right. That's why we have a Q&A session, all right, to cover all those little minute details, all right. I'm not saying make it too bland, but don't get too crazy and try to, uh, talk as fast as you can through it, all right, and any little tiny detail and so forth, all right. That's just my take on it, on the delivery. But I like the idea that this is co-founder led, all right, and going into public markets. That's something special, all right. So business model, all right. Let's talk about the business model. Um, there's a little infrastructure, a little layout of how they work in in the cloud, and what they do with identity and so forth, and they see cybersecurity prevention as more of a they see that more as a legacy play of security, and they view themselves more as the future of security. And that's kind of the little hints that I'm getting from the management and this pitch deck. All right. um so I think that's good. They got decent metrics, but all in all, their SG&A is way up there, guys. All right. But their actual ARR and growth on 36%, this is a real clean chart. All right. I have to give it to them. They got really clean, consistent ARR growth, and it's scaling. All right. So that's something the street likes to see. We'll go back here. They've hit this 1 billion mark, so they're going to be seen differently amongst the street. All right. Even though the street wants to see them differently because they own a big stake in the company. All right. Now that we covered a lot of that, do I assess this as a good investment? Do I not? Their business model, competition. I don't think this is a good investment, guys. I'll be honest. All right. So here's my big issue with this stock. All right. Yeah, the convertibles will provide a bunch of dilution and so forth. And that's typical, and that's not something good, but that's not the main reason why. Um, I have a problem with their business model. I think that their IP and tech is probably easily replicatable. I know a lot of bulls would probably fight back on it, but what's my question? This is my biggest question. And when I was listening to their earnings call, looking at everything, what's stopping Microsoft from crushing these guys? I mean, what's stopping Microsoft from, including a backdoor vault in the Microsoft Azure and adding it as an add-on to a bundle price to all these other businesses that they're going to sell this to? I mean, think about it. All right. What's to stop Microsoft from just pulling 100, 200 million out of their behemoth balance sheet and saying, "Oh, let's create a product on a backdoor vault on our cloud and offer cyber resilience and include that into the package." I can see it already. The Microsoft exec is going to the CEO of whatever business. "Hey, I see you pay 100,000 a year um, on your actual cost of sales to Rubrik for cyber resilience and security. I can offer you that for 40,000 a year. Meanwhile, I'll add it and bundle it into all your services, and I'll give you a discount umbrella bundle where you'll get another 10% off. And meanwhile, you'll lower cost of sales, you'll increase gross margin. Oh, I'm sure your shareholders and your board are going to be really happy with you. I mean, that's, I mean, that's the biggest fear that I got. I wouldn't touch this with a 10-foot pole. All right. And the valuation, right? I don't think that they deserve to trade at 10 times, 11 times sales, guys. All right. Um, Everybody can be bullish. The street can be bullish. Seeking Alpha can be bullish. I'm not bullish. All right. I see them as getting disrupted. Maybe not right away, but I could see Microsoft or one of these bigger players like Google or Amazon or their AWS or whatever just backdooring and crushing them. All right. Stock price action. The street can push it up here or there, but value is value. All right. I can see the street turning on this equity when they miss some metrics. And then the street will get desperate and turn to hedge funds. Um, and they'll start churning everybody out and start milking the equity and forcing yield and creating all these hybrid derivatives against it. You know, no way they're worth 13 billion in my eyes, 13.5 billion. I see the equity going back to $30. All right. I think they revert back to the mean. I think they get probably 5 times sales. All right. So at 5 times sales, that probably put them a little less than $30. Let me see here. Let me look at the chart. Yeah. There's some support here. Yeah. This is probably going to go back. I think this is going to break. This is going to break support. All right. So, I mean, to me, I don't think it's a good investment. I don't see moat in it. You know, I hope I'm wrong and everybody else is right, but time will tell. 5 years out, where do I see the stock? I see stock at $40 a share. All right. I see stock at 40 a share. What happens in the short term between that is whatever. All right. This channel, we're about fundamentals here. All right. So it is what it is. Timing and valuation matter. Valuation doesn't matter till it matters. And we've seen that time and time again. There's nothing new under the sun. If you're getting value, if you got value out of the video, like and subscribe, thumbs up. All right. Check out the Patreon. I got this free trial running, last chance. I'm recording this on the 29th. This will go onto YouTube on the 30th. So last day. All right. Participate in that free trial. And then what I'm going to do is I'm going to cap out the amount of membership on my syndicate because it's getting a little packed in there a little bit. All right. So I appreciate all your support. I know it's probably not what a lot of people wanted to hear on, my take on the equity, but it is what it is, guys. All right. I thank y'all. I love y'all, and take it easy until the next time.